By simply extrapolating that data, you can reach 4 billion people by 2030 and 1 billion users by the end of 2025. That's half the planet, all right? All right, what does that mean then? You can also examine the exponential trend over time and the trend rate of increase by simply extrapolating the Bitcoin log chart into the future. Thus, it eventually reaches $1 million or more. And that is that the space expands from its current value of 2.5 trillion to, say, 10 trillion at the conclusion of this cycle, possibly 12 or 15, depending on the nature of the cycle, and then to 100 trillion, which is the amount of the majority of other asset classes, such as Real Vision's founder and CEO Powell has offered one of the more optimistic long-term projections for Bitcoin and the cryptocurrency market as a whole. Powell predicts that in the next 6 years, the price of a Bitcoin coin will rise to at least $1 million, pushing the overall value of the cryptocurrency industry to an astounding $100 trillion. The cryptocurrency business has quickly established itself as a powerful and unique force, even in spite of its relative novelty. Traditional stock and bond investors might enjoy yearly returns of 10% to 20%, but cryptocurrency investors frequently see returns comparable to these in a matter of minutes. In November, Jurian Timmer, the director of global macro at Fidelity Investments, emphasized the sharp contrast between the volatility of Bitcoin and other asset classes such as bonds, stocks, and fiat currencies. No other asset compares to the frequency and size of gains observed in cryptocurrencies according to Timmer's data. Powell is unwavering in his conviction that the cryptocurrency sector will continue to grow at an impressive rate in the years to come. He made the observation that the adoption rate of cryptocurrencies is 2 times faster than that of the internet in a recent social media post. He believes that with time, this faster acceptance will raise the value of the cryptocurrency market from its present $2.5 trillion to an astounding $100 trillion. In a recent interview, Powell expanded on these sanguine projections by highlighting the revolutionary possibilities of cryptocurrencies and their ability to revolutionize international finance. Choose your time horizon accordingly. The most significant point is that, from what I've observed so far, the majority of people are terrified of the next downturn since they are still recovering from the last one's PTSD. However, if you wish to see the pioneers of this field, Dan Morehead, Wences Casera, and all of these guys, they didn't care. They simply wrote it, contributing to the downward spiral and greatly increased riches. And there are plenty of private individuals who have followed suit. However, most people are more afraid of the negative than they are of the potential. I was thrilled about it in 2020 since it meant I could compound and add to my holdings at high levels, even though it never feels wonderful. Consequently, you return to your peak far faster than those who have done nothing at all. That makes it quite interesting. Time horizon is therefore crucial. It's okay if you simply don't want to deal with the drawback since your psychology prevents you from doing so, but you should truly consider your options. People now lose their minds throughout both bull and bear markets. They sell all of their tokens during a bear market and vow never to do it again. It's the worst thing they've ever done. Additionally, people wind up purchasing too much dumb crap during a bull market. And actually not to. To possess the best asset and do nothing is to go from $2.5 trillion to $10 trillion to $100 trillion to $100 trillion to now somewhere inside every one of us is an inner degenerate. Give yourself some room to do that then. I work in dog whiff hats, bonks, and everything in between. However, looking back at my portfolio, I think it was definitely 1%. But all day I'm staring at it on the screen. All day I keep an eye on the whiff price. It's absurd. It is 1%, because everything else is merely a long-term buy and hold investment. Then I observe that many are attempting to be quite charming by declaring that they will get an undervalued cryptocurrency, such as Cardano, let's XRP or something similar. Alright, however, you run the danger that their value won't increase to the same extent as the proven asset. The tested assets are still in demand today. If I examine the growth rate compounded annually, the annualized growth rate of Bitcoin is 150%, while ETH has grown by roughly 160%, 70% or so since 2015. That amounts to a year. This is like the return of bananas. After that, Solana is around 200. And that was the previous February's photo. After all, a lot of these aren't quite record highs. Thus, the profits from simply acquiring the best assets are excellent. I am aware, however, that many people may only have savings of $10,000. Thus, they reason that even if Bitcoin reaches $1 million, it would still be a 14x increase. I now have $140,000. Is that even good for a down payment on a house? That is it a retirement fund? I understand. People prefer to take greater risks so long as they do so wisely. And that's the proper way to handle this, because a great deal of people, many of them turned their $10,000 into nothing by doing this every cryptocurrency cycle. Many were destroyed by the NFT cycle, and many more were destroyed by the extremely early stage of speculation itself. It's not like any of us are any better. We all have wallets of shame. The wallets of shame belong to all of us. Don't employ the same leverage as the other person. Another common characteristic among humans is their love of yields. I fail to see the purpose. Yields are therefore not risk-free. They carry a danger. Staking even pays off. It usually indicates that you've locked it up if you're not liquid staking. If you engage in liquid staking, there's a chance that Lido or another platform will fail or that something else unanticipated will occur. Additionally, the world of cryptocurrency is full of surprises. Leverage on an asset type with 70% volatility is extremely risky. It's likely that you'll misplace your coins. Preserving possession of your coins is your only task. For this reason, storage is crucial. Keeping your coins intact is your only task. Your future self will always be grateful that you saved it for that 5 or 10-year wager. In 2013, I purchased Bitcoin at 200. It reached 1,000. After then, it fell 87%. However, I had a lengthy time horizon. All right, it's a choice, whatever. It was well enough, albeit I didn't put much of a position on. I simply stopped looking at it for a while. I kept up with it, but I wasn't concerned with the profit and loss since, well, the wager never ends. It is a choice. Eventually, when things were starting to get hectic. In 2017, I made the mistake of selling out. I was up 2,500, up 12 times. The Bitcoin forking wars occurred. I was genuinely unaware of what was happening. Furthermore, I desired it to be extremely intelligent. I therefore kept the profits. Yes, I am obviously George Soros. I thought to myself, I recently produced a 10x and it's amazing, the following 6 months saw an additional 10x increase. I mean, nobody remembers 2017. They remain scarred from the previous cycle, but the events of 2017 marked a radical shift in direction. It dropped 85% once, or after rising from 2,000 to 20,000. It wasn't until the sell-off following COVID that I was able to rejoin. I gave the signal at that point. I then returned, swapped successfully, purchased the 50% down period, and all other items in it, locked and loaded, significantly improved my position compared to my initial application and have been in ever since. I should never have done this, yet I went back. I turned around and asked, I wonder if I could have done nothing but get 5 times better at my original position than it? Occurred to me, what would happen if I followed my instructions and, let's say, doubled the initial stake that wasn't so large that you couldn't do it? Just multiply that by 2. Simply add that same amount to the load, up to 40%. You're giving yourself a lot then, not that you won't experience a low, but there is a 40% chance that you will find a way to avoid it. Based on the average dollar cost during a bad market, I might have outperformed by a factor of 25 due to compounding. And that lesson was quite clear. Right now, my working theory is based on what you've seen me post about previous cryptocurrency adoption charts. We thus employ active wallets. They are being double tallied, as we now know. However, we are comparing it to the double counted IP addresses on the internet. So everything is okay. It provides you with a general guideline. There are 520 million to 550 million active wallets worldwide. It is expanding twice as quickly as the internet. Thus, this is the world's quickest adoption of any technology or asset class to date. Artificial intelligence